Hey guys, what's going on? Welcome back to another video. In today's video, I want to talk about protecting your portfolio from downside, what's been going on in the market, why is crypto absolutely getting destroyed, and what can we do as investors to try to hedge against these big drops that are happening out there in the stock market. We have our portfolios, we depend on them for monthly distributions. We want to make sure that those distributions keep coming in so that we can live, pay our bills, and all of that. So stick around, hit the like button. And as always, guys, nothing here is financial advice. Now, as we sail through the seven seas of yield, looking for that yield, chasing after that yield, and people are investing in things like HHIS and Biggie, and I gotta say, guys, like HHIS, I love HHIS. I've got a big position in it, and myself that you can see right here. But here's a quick look at my portfolio, and you can see out of all my positions, what is absolutely getting destroyed is HHIS, and down here at the bottom, my Bitcoin position as well. So my Bitcoin position, which I don't have a lot in, I had about a $5,000 investment, which has been almost cut in half now. Some people have huge positions in certain things that are a lot more risky, and maybe when they invested in it they didn't think it would be as risky. And what I'm talking about is stuff like MSTE. You guys can see here, this is down 82% since it came out. This, just even the fact that they have this inside of HHIS kind of makes me nervous, because it's like the 82% since it came out. It came out at close to $15. It's trading now just barely above 250, so it's not even at $3. A lot of people bought into it in the $15 range. It was swinging between 15, 17, 18, 16, but you guys can see after the summer, July and June, after August, basically things it's on a completely downward trend. And if you've got a stomach for it, that's fine. A lot of people are going to ride it out. Personally, for me, that I couldn't hold a position in MSTE with any meaningful amount of money, even just this Bitcoin position. It sucks to see it the way it is. I mean, it's still, you're still getting that income out of there, but like, if you've invested a lot of money into a fund like a Bitcoin play or MSTE, something like Biggie even, right? Let's take a look at Biggie. Biggie, was trading in the 20s, 25, 24, 23, 25. It's now down below 20, and a lot of people are speculating that the distribution might get cut because you've got a very concentrated fund here, right? So what I'm saying here is that when times are good, it's easy to look at these things like the HHIS and MSTE and Biggie and jump in and get those yield and those distributions. And I'm not speculating that HHIS or Biggie will cut the dividend, or that they're necessarily bad investments, but I think it's important to look at your portfolio and see how much you have in these certain concentrated higher yield ETFs. Because when I look at my own and I see things like USCL, which is still down, I mean, it's down over 1% today, but I still have a positive return on it, even though I bought it quite a bit higher than what it's trading at today. Same with HYLD. What's HYLD trading at? $14. And so I've been buying HYLD for a while. My cost basis is, just around that $14, right? $13.85 is my average cost. So, you do have long-term growth and stability with these more diversified funds. So, HDIV, same with HDIV, and like Canoe EIT. I know it's got a low yield, but man, Canoe EIT is like saving my portfolio right now. It's like Canoe EIT is like the only thing this week that is actually in the green as far as price, like the share price, And I know it's, we're looking at share price, we're looking at yield and distributions and everything, but it's just important to play these investments the way that you're comfortable with, because I think too many people see these big yields from, stuff like MSTE or Big E and HHIS, and it feels too, you know, it feels too easy just to throw $250,000 into HHIS or Big E and then just be completely set, and have a higher income than all of a bunch of different funds combined. But I'm just showing you guys this to give you some insight into my own portfolio and how things have been doing, because it's been getting absolutely hammered, just like everybody else's. Obviously, technology has been as well. So, like, here's Q Day. And I just started buying Q Day not that long ago, maybe like about a month ago or something. And, I'm down close to 5%. But so we know through doing our research and looking into how things trade and stuff like that these ETFs, if they're managed properly and everything, the prices will come back, and let's hope the distribution stay steady. But guys, having diversification, especially away from the crypto world, which is getting destroyed right now. So you could look into ETFs like BMAX from Brompton, which, if we look at the last week, it's only down not even 0.5%, right? HPYE just recently came out from Harvest. They've got their own unique strategy. They focus on blue chip American stocks, only the kind of the big blue chip names, a lot of, stable dividend kings and stuff like that. You could look into the Canadian market with high yield too, with stuff like HHIC. Honestly, for me, HDIV is always a go-to, because HDIV has got a lot of Canadian, and they've kind of got those really good U.S. technology in there as well. But you can see HDIV over the last week and the last month, it's only down not even 2%, right? So these types of funds, even HYLD being well diversified, these types of well diversified investments, they might have lower yield than Biggie or HHIS or a Bitcoin play or MSTE. But guys, as we all kind of grow throughout our investing journeys, I think it's important to realize that different sectors can get hit at different times. So when you have a diversified portfolio, you have different fund managers, different funds, different stocks, kind of, here and there, you will protect your portfolio. Because guys, I love HHIS, and when it first came out, there was a little part of me thinking, oh, if I just put everything in HHIS, here's what we could do. And I'm not saying that that's wrong, but if I were to do that, my portfolio would be down a lot more than what it currently is, with currently only 3 out of 10 positions in the red. So I'm still winning as far as price appreciation, and being in the positive as far as my investment positions, right? So it's just good to understand what you're investing in. Don't just chase after the highest yield, because the highest yield doesn't always mean that, well, number one, doesn't mean that that yield's going to continue. It doesn't mean that those dividends will always continue the way they were. In the case of something like MSTE, I got to think that they got to do a reverse split on this sometime, because this is I was kind of worried when it was like that $4 or $5 range, and now it's it's going to be $2 a share soon. And unless something changes big time, they halted it. You can see here, they halted trading just recently on it. And I get trade alerts from my brokerages on this one all the time. It's one of the ones I have on the watch list. I also was tempted to buy it. Luckily, I didn't. Yeah, guys. So I mean, if you bought something like this, hopefully it comes back, and hopefully Harvest has a way to manage it, and whether they reverse split it or what happens with Bitcoin. But guys, this isn't even like a major crash, but this kind of just goes to show you that being well diversified, like I said, really is important when you're investing, when you have kind of all of your chips. Especially like for me, I sold off all my real estate, so everything I have is in my portfolio now. So again, guys, even something like EIT, Canoe EIT, yeah, you're not getting a big yield on it, but this is what I like to call the anchor of my ship. When my ship is getting rocked by those big yield waves and they're coming through and hitting it, this thing I just throw that anchor down. This is seems to always do it. It always seems to kind of just keep things together, right? So I'm glad I never sold off Canoe EIT. But anyways, guys, this is just a small lesson for my own portfolio. It's not financial advice. I'm not telling you to buy any of these certain ETFs, but being diversified at the end of the day, I think we all can understand is very, very important. Anyways, guys, I hope everybody out there is having a great week. I will catch you guys on the next video.